Hello, good afternoon. You're watching Closing Trades on ET Now. For now, the market is in the red, but for what it is worth, it's much better than where we started off the trading session with. It's managed to snap the 14-day gaining streak. In fact, it was one of the longest streaks that we had seen on the gaining side ever. So we were poised for perhaps a bit of a correction in the sideways move, and that's exactly what has panned out right now. It's, of course, the global factors which is at play right now. PSU banking space, that's leading the fall today. Remember, Morgan Stanley came out with a note this morning saying how they're looking at shifting away from the state-owned enterprises to private large banks, and that's exactly what is playing out right now. They're also talking about how they prefer the private banks. In fact, FMCG and pharma, that's in the positive territory today. So a bit of a defensive play at work. And also the fact that crude has cooled off. That means that a lot of beneficiaries, the likes of paint companies, they are doing quite well. So for instance, Asian Paints is higher by around 2 to 3%. It's one of the top gainers at the index level. You also have Berger Paints, Indigo Paints doing quite well in the trading session. Not just that, defense as a pack is also fairly active. That 1.5 lakh crore of projects which got approved by the Defense Acquisition Council means that the likes of BEML, Muscat Dock, Cochin Shipyard, they're all doing quite well in the trading session. So lots really to talk about. And then you have the small cap index, which I think was outperforming a smidge versus the frontline index. Let's pull up the broader markets and see if that outperformance really continues, because the mid cap and the small cap indices were faring better. So just around the flat line versus that 100-point decline that we're seeing on the index, Aisha. But that's purely global in nature.
Oh, yeah, absolutely. And I don't think today you can at least disconnect yourselves from the rest of the globe. The week start was thanks to the weak US handover, the way Asia lapped up onto the weakness. In fact, we must mark that because Japan was down a good 4.25%, no less. Even periphery markets like Australia fell about a good 2%. Hong Kong was down nearly 200 points. Shanghai down about 0.6%. And there you go. Nifty, even though we're a lot better in terms of the percentage move than our global counterparts, because even Europe has started off down about almost 1%, pretty much across the board. The only disappointing thing is that you're not really seeing any improvement in the pre-market rates for the future. Even when we came into trade, they were still trailing. And right now also, Nvidia is down a good 2% in the pre-market trading after the plunge that has already wiped out about $300 billion in market cap overnight. So you've got the Nasdaq futures down 100 points right now. S&P is well in the red, and so is the case with Dow too, which is down over 100 points as we speak right now. But Gurmeet Chadha on the show. We also have Naresh Mirani. Gurmeet, hi, afternoon. Let me kickstart the discussion with you. And I guess what we're seeing today, pretty much par and parcel of any bull market. I don't think investors should be too worried, should they?
No, not nearly. It's not even 0.5%. If you see, and I think everybody has been waiting for it. I think some mean reversion will happen, maybe towards large cap as we go along. And even if you see the price action, there is smart rotation happening in the markets, especially where the earnings were weak in Q1. So if you see the BSE 500, the EPS growth was sub 5%, and more than 240 odd stocks are around 45, 50 times earnings. So there's a bit of rotation happening. It happened towards IT, when the yen carry trade started unwinding, a bit towards pharma and FMCG in terms of defensive names. My sense is once we start seeing the rate cut cycle, as US economic data yesterday was quite weak and it seems like the Fed is behind the curve. I think once the rate cut cycle starts, we'll probably maybe see a shift towards financials and NBFCs also. So I think rotation is what you will see. India in particular, I think the macro setup looks good. Crude is 73, $74. The US will start cutting rates. The dollar index is fairly comfortable. So a little bit of jitters here and there, I think we should be okay.
Yeah, we should be okay. That's at least a baseline assumption that we are dealing with right now. But Naresh Mirani also with us. Naresh, is that the baseline assumption for you also, that the market trend continues to be on the upside? It's only one of those perhaps softer days that we are witnessing right now. Do you think we're in for a bit of a consolidation, profit booking, sideways move after that 14-day stellar rally?
So 14 days and roughly 5% uptick, and we've given up 1%, say 0.5%, 1%. So essentially over the last 6 to 8 weeks, the index has really not gone anywhere. It's been at the same 25,000 plus minus 200 points. But at the same time, we are seeing sector rotation play out really well. You have the Nifty Pharma Index doing a 10-15% move. Stocks across the pharma pack doing well. Then we've seen insurance companies do well, and even say smaller sectors like a OMC basket doing well. So there are baskets of performance right now in the markets as well. So it would be more stock specific. Right now, FMCG looks interesting. We are seeing a new 52-week highs being knocked at some of the FMCG names. So the structure seems to be more defensive. So it looks like we are getting into a consolidation per se with sector rotation, but a defensive sector rotation rather than the high flyers of PSU names like defense moving up. They've all corrected. So time to be a bit more defensive.
Be a bit more defensive, and defensives is what is doing well in the trading session today. Pharma and FMCG. Gurmeet, are those the pockets which provide the best amount of safety as well as risk reward right now? FMCG because of the rural recovery, and pharma because there's another important trigger lined up, the US Biosecure Act, if it goes through in the coming week.
Yeah, I think pharma in particular would Biosecure Act. It goes to Senate next week would be a big trigger, especially for a lot of CDMO companies. They plan to make some sweeping changes on raw material API procurement, from adversely and non-adversely nations. We'll see how the final draft comes out. But then we have a few companies which we are tracking in terms of in our radar. Syngene is one of them. Divi's obviously is the bellwether. It's already at 5,000. Recovered very smartly in last a quarter or so. And maybe a few other CDMO names. FMCG in particular, I think the rural spending will pick up. We have Maharashtra, Haryana elections. A lot of cash transfers, etc., announced by the state government as well. And then you also have a festive season coming up, which is usually the best season for consumer companies. So, I agree with you partially. Pharma also, I think, deserves more rather than just tactical or more strategic allocation. So if you see last 10, 15, 20 years, it's always outperformed Nifty 50. On the beta side, on the negative side, the beta is only 0.5, 0.6. So falls half of what the market does in turmoil. And it's very underrepresented, Anisha. It's just 5% in BSE 500, which is almost equal to HDFC Bank. So I think gradually you will see probably more weightage also coming. So we are also looking at some of the branded generic plays like Mankind Pharma. We got a good entry point when they announced the acquisition of BSV, and it gives them a very strong play in women healthcare, especially the fertility space. Which is a very fast growing area.
I want to talk about what GICRE is up to, considering, the government has come about with its floor price, 395 rupees per share. That offers a 6% discount to yesterday's market price. Currently, the stock, of course, is lower by about almost 5.5%. In addition to that, Gurmeet, we were just culling out a list of the companies wherein the government has in excess of 90% holding and which may be the next candidate for some OFS. There's a KIOCL, there's Punjab and Sindh Bank, there's LIC, wherein the government holding, of course, is as large as 96.5%, IOB in excess of 96%. Similar is the case with the UCO Bank, above 95%, Central Bank, 93%. You think right now is the time when the government can cash in and perhaps more such OFSs will be seen?
Their track record on OFS have been a little slow last couple of years, especially. They've time and again missed divestment targets. So I don't know. I mean, this kind of investing can be speculative. But I look at PSUs in terms of where there is a more structural turnaround, especially for example the tier one PSU bank, great turnaround. Look at SBI for example. The YONO app last quarter onboarded 38 lakh saving accounts. Their market share in debit card spends is almost 24%. On mortgage now they are the market leader. It's the only bank which has actually gained market share in CASA as well as leading retail lending products. Still at 1.3 book. I think at some time, I think YONO is as neobank as it's a best in class. At some point of time, maybe neobank can be hyped off. We are looking at some of the defense names now. There's been a healthy consolidation. We saw an order approval of almost 1.5 lakh crores yesterday in terms of notification. A lot of them orders are in terms of radars, in terms of combat vehicles. There are list of items there. And so I think if you dig a little deeper, you'll probably see a lot of opportunities. Also, the 30% offset clause for foreign partners, the unutilized figure is almost 50,000 crores. So a lot of orders you will see, lumpy orders coming your way, probably in the next 12, 18 months there as well. So I'm liking that space as well. I'm taking more a structural call rather than a tactical call on PSUs. In some places, as I said, there is a genuine order visibility, genuine turnaround seen in the balance sheet.
Okay, point taken. So that's a view on some of these names. But Jubilant and Grevia, as we were talking about, is up almost 10 to 11%. One of the triggers is the fact that Equirus had come out with a note today and they've increased the target price, if I have it right, all the way to $900. But what's the thesis that they're talking about, Shrishti?
Well, certainly, Equirus has come out with a very positive note on Jubilant and Grevia, taking the stock higher by more than 10%, and not just that, very close to its all-time high levels as well. And the reason in today's report that they are citing is that, firstly, onto the rating, they continue maintaining their long rating while hiking the target price from 660 rupees earlier to 900 rupees now. A couple of factors there. Firstly, what they're highlighting is that the company is seen to be moving up the value chain. They're highlighting that between FY22 and 24, the company has done a lot of investments of over 1400 crores in some of the key segments, which include the downstream derivatives in the pharma and the agri segment. And not just that, between FY23 and 25 as well, there is additional 22,000 crores of capex that is planned. And with this addition of new products in these particular segments, and especially some of the new projects coming in from the nutrition segment specifically, are expected to help Jubilant and Grevia. Other than that, the tailwinds from the Vertilis closure is also expected to help Jubilant and Grevia. Why so? Because the company has become the world's largest non-Chinese producer of pyridine, dominating the global markets as well, and especially after the closure of US-based Vertilis, then Jubilant and Grevia is expected to be a key beneficiary of that. All in all, they are projecting 23% of EBITDA CAGR for Jubilant and Grevia between FY24 and 27. That could be fueled by 32% growth in their high value segments. And on the back of these factors, they have gone ahead and raised the target price. And not just that, the stock is also quite excited. More than 10% gains coming in on this counter. Back to you.
Okay, that's that on Jubilant in Grevia. That stock, of course, holding out. Let me also welcome on board Shrikant Chauhan and figure out what he's making of the charts in the market right now. Shrikant, we're still latching on to that 25,000 mark, even at the session lows. Now, of course, bounce back to 25,200 on the futures. But what is it that you're marking in terms of a support?
Yeah, good afternoon. Good afternoon, everyone. I think, Nifty it's still in the range. It is still above the important, crucial psychological mark of 25,000. Despite there was a very steep weakness in the morning in the first half, we saw smart recovery from the lower levels, and most of the broad-based companies, I'm to say the broad-based sectors, they started participating into the market, and we eventually now seeing the market is very close to the levels of 25,200. So while looking at the entire setup of the market, I think till the markets are not breaking the levels of 25,000, I think it is going to consolidate within the broader range of 25,350 on the high side and 25,000 on the downside. Ideal strategy should be to look for adding long position if there is any correction, or let's say if it falls back to the levels of 25,100, and we can keep a stop loss at 25,000 on a closing basis. I'm of the view that if we see any rebound close to 25,300, then only we can see some profit taking. Otherwise, I think it is going to remain in a range. But we need to be more and more stock specific in this market, as today we are seeing good amount of buying attraction in mid cap and small cap companies.
Okay, point taken. So that's the view on the markets right now. Time for a quick break. Don't go anywhere. When we come back, we'll talk about a lot more stock ideas.
Back with closing trades right here on ET Now. Some key pressure points today continue to be in RBL Bank. That's still lower by about 4%. Look at a BHEL, that's down 3.5%.
Some of the technology names, of course, have been underperformers from the word go. Wipro being a case in point, definitely. There's also LTIM and Infosys, which are also down about 1.5% or so. And then, of course, there is the Hindalco, M&M, ONGC, which was a big laggard today. It's down about 3.25%. And Tata Power also, which has fallen about in excess of 3% as we speak right now. Gurmeet, you were chatting about, this entire, rotation which is playing up in the markets. And you did speak about some of the staples as well as pharma themes. But what within the other side, which you don't think is going to rotate, wherein there is, both value in the table and definitely growth visibility, wherein investors should stay put?
See, I think if you see some of the corrections which have happened in the market, you'll find a lot of chemical names, for example. There's something may not happen immediately there, but the destocking, in my view, probably should get over. So look at, for example, some of the API names. The solvent prices are down. The destocking is almost done. Something may not come immediately, but a US biosecure law and few more, 1 or 2 good quarters can really re-rotate, especially some of the good names like RP, Deepak, Tata Chemical on your screen. It's at 11, 12 times. Soda ash prices are down as China continues to do that. Similarly, I think there could be some opportunity, in FMCG names, which in my view the growth has been more like single digit, but you got to preempt that there's a lot of focus coming on the rural economy. There is a bit of a stress, which we saw some of the impact coming in the elections. A lot of government policies are now geared towards that, and we have a very strong festive season. So companies, especially in food, like the Tata Consumer of the world, you have LT Foods, people who are very well, there is a tailwind of movement from unorganized to organized. Second is, more spending coming up, more cash transfers happening. Then we are also looking at some of the new age businesses. Very good correction in Zomato over the last, let's say, month or so, almost a 10-15% correction from the peak it made. I think Quick Commerce is doing extremely well. I think that's one business which I think can still grow at 50-60%, and can really give. In fact, a lot of reports are already talking of it turning EBITDA positive in FY25 itself. So food delivery grows at 2025. You have quick commerce, which can give you 50-60% growth. And I think the ticketing business gives you some presence in out of home consumption as well. So these are some of the names, which we are trying.
Gurmeet, also wanted your take regarding auto OEMs, and I remember it faintly. We have had earlier conversations. You were positive on the likes of Sona, BLW, Minda, and some of these names. Would you maintain that view? Because Sona, BLW for now is actually doing quite well.
Yeah, so there's this news of they acquiring the railway arm from Escorts Kubota and doing a QIP. They've made their acquisition plans quite public. They've been very vocal about it. And one thing, if you see, they have a market share in differentiated gear at almost 55-60% in PVs and almost 75% in commercial vehicles. The Havel gears they make are amongst the best in class. And the EV portfolio, which is, the traction motors, the BSGs, that also seems to be doing well. So in terms of new programs, EV has a healthy mix. And if somebody has growth plans, and the stock has consolidated, especially most of last year, like if you remove the last 1 month move aside. So continue to be positive there. We also like another company called Precision Camshaft, which again has 60% market share in camshaft. M&M has also now moved from one of the Chinese vendors to them. That is something we are tracking. It's done quite well of late, post their analyst meet with a lot of brokerages, and they're getting into retrofitting, which is converting old vehicles into EV, although it's a very, very small, insignificant part right now. And we continue to have exposure in Uno, Minda, and Sandhar. I think there could be a bit of a softness because of the Savan etc. season, which is lead up to the festive season. So numbers you might see some discounts coming, but it will pick up. So I think in that space you have to be more like a buyer on dips. And globally also there could be a hangover. Volkswagen has already announced that they have overcapacities in Europe. Who would have thought that the German makers would struggle against the Asian brand, but that's happening. So there could be a bit of an overhang there on auto, but we continue to be buyer on dips in that space.
Taken I just wanted to kind of dig deeper on the topic that you were talking about, that potential acquisition perhaps for Sona BLW. What would you make of that? Because if I have my understanding correct, they're not present into railways right now. If the deal does happen at the valuation that people are talking about, do you think it's EPS accretive, or is it something that the QIP would lead to dilution?
See, I think it's a function of what the deal specs are, whether, how much EPS accretive it would be, or whether it immediately, they've announced QIP. I think we have to see. I mean, there's no formal announcement yet. The mix of how the acquisition looks like. Only then I think I'll be able to comment. But as I said, they're hungry for growth. And even granularly, if you see last quarter, for example, they almost 900 crore top line, which was the highest ever. The gross profits were at about, I think, excess of 500 crores. So I think the on unit economics on differentiated products, I think they have done well and they continue to do well. Any expansion into high growth areas like railway, could mean good, provided there is discipline in terms of how the overall capital allocation happens. Railways, I think, have a huge capex lined up for next 6-7 years. We are talking of some 850 Vande Bharat trains. We're currently only at 45. So overall, the opportunity in the entire value chain, whether it is, the construction, the track systems, electronic components, bearings, the industrial ecosystem. I think in my view, there's a lot of long leg in that space, and that's the reason probably they would have thought of, growing in that space.
Right. In fact, just broadening that point, Gurmeet, because we've seen a bit of a dip down when it comes to at least passenger vehicle sales data, right? You think come the festive season and that also will course correct, or do you sense some sort of pressure is going to continue there?
No, I think festive season should be good. I think there are a lot of new launches which also happen around that. So if you see the best-selling models, let's say XUV 700, or let's say a Tata Harrier, Creta of Hyundai. Hyundai IPO, I think, is due. I don't know when that is due. I think they continue to have still waiting periods. It's only at Mahindra has come up with the Thar, which is the 3 and 5 door. So I think there are a lot of launches, and I think the EV adoption has been slightly slower than what industry thought. So I think it's more been the traditional IC and hybrid. I think hybrid is where we are making a lot of space in. So my sense is that we had a spectacular run up. Look at what Tata Motors was 3 or 4 years back, or an M&M was. I think all of them are up 3 to 4 times. So some consolidation is normal. But my sense is I think we still are doing almost 40 lakh vehicles a year. India and China used to do same vehicles in 90s. Today China does 2 crore cars. We are still at about 35, 40. So I don't see there's any issue as per capita picks up. I'm not saying we're going to hit China. But I think over, let's say, 4 or 5 years, this number is only going to go up. In fact, I'm not too bullish on two-wheelers as much. I think as your per capita goes up, the PV tends to do better than the two-wheeler space as well. So I think I'm still constructive there. And as I said, I'll be a buyer on dips in that space.
Gurmeet, on that note, we let you go. Appreciate you making time and speaking with us. Srikanth, in the meantime, your word on some of these crude beneficiaries. Take a look at HPCL. That's managed to perk up quite substantially. Berger Paints, Asian Paints, all of these names are doing well. Would you be a buyer for any of these names, or would you recommend booking profit on any?
Yeah, definitely. I think the way there is fall in crude prices, crude was around $85 and it was holding consistently above the levels of $75, $76 per barrel. But on Tuesday, we saw this particular technical breakdown for Brent crude, and now it is comfortably trading below the mark of 75, which is something concerning. And I think crude is now heading for the levels of at least $68, $69 per barrel. So based on that, yes, we can see a good amount of activity in oil refinery companies, especially in HPCL, IOC, BPCL. But in that space, we like BPCL, which is currently trading around some 355, 357. There we feel that it is heading for the levels of at least 370, 75 in the near term. From the paints industry, we like Asian Paint, but also I think we need to focus more on Berger Paint, which is currently trading at 597, 596. The reason is because it was like underperforming since last so many months and years. But at the same time, on technicals, I mean to say on charts, it has formed double bottom sort of formation. So based on that, the stock can again move back to the levels of 700 or 725, which is very clear based on its technical formation. So Berger Paint is also buy at current levels with the stop loss close to 575 on the downside.
You're expecting crude to go to the levels of $68, $69 a barrel?
Yeah, for
Srikanth?
Brent crude, yes, it's possible because see, like it was holding above these levels for almost a year, and yesterday's breakdown was quite severe. So yes, we can see furthermore decline in the near term.
Okay, that's quite a prediction. In fact, we should bring up the charts of crude because, yes, they've been on a correction for the last 3 months. But yeah, 65, so well sub the $70 per barrel mark is what Srikanth is anticipating, at least looking at the charts. We're going to take a very quick break on that note, but also hear out from Praveen Jaipuriar, the CEO at CCL Products. He shares with us his guidance for FY25, aiming a value growth of about 20 to 30% and volume growth of about 10 to 20%.
Right now, we are up and running with around 71,000 metric tons, including all our capacities across the globe. And there'll be another 6,000 metric tons of freeze-dried that will get added in Vietnam in about a couple of months' time, which will mean that by third quarter of this financial, we'll be probably at 77,000 metric tons. So all that is on track, and yeah, this capacity expansion is in anticipation of the volume growths that we have been driving internally for ourselves. Given a little broader guidance of 10 to 20% volume growth, and you add another maybe 10% of value to this, so probably we could end up anywhere between 20 to 30% value growth for this year. So that's the kind of volume value projections that we have given for this year.
Welcome back. Not much recovery as far as the frontline index is concerned. Yes, from that 200-point drop, we have seen a bit of a recovery and we're at the highest point, but still a bit in the red right now, but close to that mark of 25,200 thereabouts. So actually making a bit of a recovery as we speak. What are the individual constituents which are leading this move in the last few minutes? It's Asian Paints, which is up 2.5%. Grasim is doing quite well. HUL, Sun Pharma, Apollo Hospitals. These are some of the names which are actually doing well. And from the broader markets, as we pointed out, CCL Products, Piramal Pharma, Jubilant Ingrevia, then the entire defense pack, BML, Mazgaon Dock. These are the names which are holding up. Siddharth Khemka also joins us in the discussion. Siddharth, what's the view on defense now? Because, of course, they've gone through their correction. Do you think they are in the buying zone right now, or would it take a bit more correction to enter that area?
Yeah, hi, good afternoon. So, Anisha, if you look at the overall defense space, the sector is poised for a structural growth over the next 5-10 years. So, we see any decline that we saw in some of these high beta names in the past few weeks as a good entry opportunity for long-term investors. You must also bear in mind that the order book for some of these companies are at almost record highs, and the order book stands for the next 5-6 years. So the execution, which has picked up pace in the last few years, will continue. Some of them will add more capacity. Plus, we are seeing consistently government adding on to the list of indigenously produced equipments, plus consistently giving orders for the defense space. So yes, I think we are positive on defense, and any such correction in the market would be only used as an entry opportunity to add gradually. Given that in the last few years, some of these stocks have moved up sharply. So I would suggest not lapping up everything in one go, but pacing it up and adding it in tranches.
Right, okay, that's that on defense. In the meantime, some of the other active movers, and I want to check in what an AU Small Finance Bank is up to. It submitted an application to the RBI to transition from a small finance bank to a universal bank. The stock started off the day well and has only managed to build on since then. 2% higher is where that stock is currently. Mankind Pharma also may be, one such case in point, which is going to be in focus. Other than that, of course, we've been talking about the buzzers. There's a Biocon, Berger, Granules, Asian Paints, HPCL. They're all holding quite smartly in trade right now. But Naresh, just want to revisit what the crude sensitives, other than paints, but even in HPBP, which don't technically have reason to move up on the crude cool off, but they've been on a tear. Naresh, the OMCs on the
I missed out
charts.
Yeah, OMCs look promising because if you look at it, the way Brent crude is shaping up, it looks like a possible breakdown. Even if not a breakdown, does not look like a case where it will jump up to 90 in a jiffy. Then you look at charts, we are seeing BPCL break out. We've seen HPCL do really well. IOC is the one which is interesting, which is yet to break out into fresh 52-week highs. So at current levels, IOC looks the most interesting one in terms of risk reward. Second is BPCL, and third would be HPCL. But the structure is positive. It's a multi-year breakout, and they've consolidated for a long period of time in terms of return. So positive on the whole sector, and I've been for some time now.
GC, let's bring up that stock as well, because lower crude would definitely mean lower earnings for them, unlike the OMCs. And a $5 drop in oil prices would decrease the EPS for both ONGC as well as Oil India by about 7 to 12% respectively. ONGC 2.5% lower right now. Oil India also will just come up for you on your screens next. And I think that also has been under pressure today. Yeah, that stock sharply lower, in fact, at the session lows, 6.5% lower and still falling further as we speak. Shrikant, since you're anticipating further lower levels on crude, tell me whether this ONGC mega rally which was in place, that's going to get stalled for a while?
Say like for ONGC, it is into multi-year breakout. Like it was around some 300, 320 levels. Between 2014 and 15 years, and that time it was like it was completely depending upon the movement of the crude. But this time it is completely I'm going to say it is not like only depending on the overall entire move of crude. There are like number of other businesses in which ONGC is involved. So I'm of the view that it is an opportunity for traders, investors to grab this particular stock close to its all-time previous all-time highs. I'm going to say around 310, 315 levels. I think currently it is around it is trading around the same levels. And from here again, the stock can bounce back to the levels of maybe 355 or 360. But in the long run, I'm expecting stock to move towards 400. So because of this particular reason, the stock is falling, but it will be an opportunity to grab even at current levels.
Point taken, but it's not just crude which has taken a bit of a slip. If you look at the rest of the industrial metals as well, they too have taken quite a bit of knock overnight as well as over the last couple of weeks. But there is a bit of a silver lining coming in for the Indian steel manufacturers, because if you go by the word coming in from Steel Minister, there could be a potential hike in the import duty so that the dumping from China actually gets stems a bit. In fact, Siddharth, what's your view on metals as a pack, steel companies, etc.? And then we'll play the soundbite of the minister as well.
Yeah, Anisha. So if you look at metals, I think they are witnessing some recovery on back of the expectation that the global interest rate cycle will turn for better, and with the interest rate cut and the dollar index going down, I think demand for metals globally should improve with economic growth. Yes, on the given the commodity nature, the sector does witness intermittent volatility. But from here on, we are expecting things to improve, and especially the ferrous and non-ferrous. We are positive more on the non-ferrous side, where Hindalco is our preferred pick. Even on the ferrous side, we believe something like a JSW Steel and SAIL, they could do well. But yes, in the interim, there could be fall, which could be an opportunity to add for investors.
The way in which China dumping the steel to the country, all our industry, you are in actually some kind of terrorist-like thing, I think, according to me, from China. From last 2 months, several times our friends came and met me. What are all the problems they are facing in this actually growth of our steel industry? about the China's issues. I can understand. I will promise you that the problem which you are facing from the China, for that actually I try to convince our Prime Minister and Finance Ministry to look after about the from 7.5% tax to 10 to 12% your demand is there. For that, definitely I will going to try to convince and to bail out the present problem which our steel industry facing in India.
Domestic steel industry's growth is going to be affected if imports do sustain at the current pace. That's also the word coming in from ArcelorMittal's Dilip Oomen, who also added that they've requested the government to impose duty amidst the threat of further dumping in the country.
We just have to see what the other countries have done, what US has done, what Canada has done, what European Union is doing, what Southeast Asian countries are doing. We have to repeat that. Basically anti-dumping or an anti-dumping duty, increase of BCD. These are some of the.
What would be the quantum, sir, as far as?
No, that is for the government to decide. That is for the. But the problem is that if the imports continue as it's happening now, the steel industry will not be able to expand. We have to grow. This per capita steel consumption in India is only 95 as compared to 230 average worldwide, globally. So we have to grow a long way. But how can you grow if you're in the red, if you're not making profits? How will you reinvest? And also you have to reinvest for climate change. You have to decarbonize as well. So that's the point.
So you also spoke about the demand-supply scenario, the reduction in prices vis-a-vis input costs. So any specific thing that you are? Yeah,
it's just that, the input costs have not come down as in proportion to the steel prices, the way it has come down.
That's the latest coming in as far as the metal industry is concerned. But Siddharth, there's also this clamor around FAME 3, right? And the entire discussion whether it will happen, not happen. For now, we're expecting that relief will happen for some of the EV companies. Overall, is there any play left as far as that entire EV transition is concerned, or do you think most of it is well discovered now?
Yeah, Anisha, I think EVs are still going strong, and especially if you look at the penetration in the three-wheeler space, in the passenger vehicle, two-wheelers, and the two-wheeler space, that is where bulk of penetration will happen. Two-wheelers, we are seeing strong offtake, especially because of the FAME subsidy that the government has been providing. Until the actual cost of production comes down, the subsidy will have to be maintained for the steady adoption of EV two-wheelers. At the same time, there will be a gradual, you can say, adoption of EVs in the passenger vehicle segment also, where some of the players are now planning to launch. Even on the hybrid side, Maruti has got the technology and is doing well. So for us, what we believe is that on the EV side, two-wheelers are the best bet for now, where among the listed players, TVS Motors is better placed. Ola, we don't have a rating right now, but again, in terms of pure business growth, they will also do well. And in the overall passenger vehicle segment, we believe Tata Motors is the best play to look at from a EV perspective.
Okay, that's the best play when it comes to the EV play. That's Tata Motors. Of course, a whole host of auto anchors as well, which have a more concentrated EV linkage too. But in the meantime, just looking at the screen right now, and let's bring up what the Nifty Bank is up to, because that underperformance clearly stays. So I just wanted your thoughts on, banks, because we've seen the underperformance, we've seen the credit growth concerns. Where is it all leading to from an investment perspective?
Yeah, definitely. That is one sector that keeps on in the limelight and has been underperforming in the past couple of quarters. So what we see is that I think from here on the NIMs would kind of improve. Yes, there has been some pressure, especially on the business growth, both on the lending as well as on the deposit side. A bigger concern has been on the deposits, where some of the large banks have been unable to grow the deposits in sync with the credit growth. What we are expecting is would be a steady 12-13% credit growth. NIMs will stabilize and improve from here on. And again, in terms of sectoral preference, what we are liking is the public sector banks, where earnings momentum would remain steady, asset quality has been pretty strong, and valuations are still comfortable. In private banks, business growth has been a bit tepid, and margin pressure has continued. So among the private banks, only ICICI saw a very healthy growth in terms of earnings as well as in terms of credit growth, which is our preferred pick. In terms of public sector banks, SBI is our preferred pick, followed by PNB in the public sector space.
Recommendations as far as some of the financials are concerned, case in point being SBI, which has actually moved up in the last few minutes, so tracking that one. But I think since we're talking about the banking sector, maybe we can take it across to Gaurav to get a better understanding as to what the overall universal banking will mean for the EU Small Finance Bank. We'll get to that in a bit, but before that, let's take the BSE trades. Naresh, what's the buy today, sell tomorrow idea, if any?
So first is a buy on Hindustan Unilever. The stock is on verge of a fresh breakout. Did a new 52-week high. Stop loss at 28.10. Target price of 2900. Second is a buy on HDFC MC. Strong relative strength here as well. Stop loss at 44.60. Target price of 4600.
Srikanth, any top bets as a BTSC trade or the STBT trade?
Yeah, I think there are a number of stocks which are really doing well, and they're crossing their important levels, even though the market is in, I'm going to say, is not in that great shape. But yeah, there are a number of companies which are really doing well. In that space, in that particular basket, if we see any particular stock, then Biocon is crossing its important resistance level, which was around some 375, 378. And the stock has spent almost year below these levels, but now it is about to cross this level. So based on its technical formation, I am of the view that very shortly the stock can move to the levels of 400. It's a buy at current levels with a stop loss close to 370, 368 on the downside. The other stock which we like is Grasim, and there also we are seeing that it is forming higher top, higher bottom series. Today it is around 2760, but technical formation is indicating us that it is about to retest its previous high of 2870.75 or maybe even 2950. So Grasim is also a buy at current levels with a stop loss close to 2640 on the downside.
We're just talking about AU Small Finance Bank. That's been in focus. They've applied to the Reserve Bank for a voluntary transition from a small finance bank to now a universal bank. In fact, Gaurav is here to explain what exactly would this transition imply. Gaurav?
Well, yes, EU Small Finance Bank has now applied for universal banking transition from the Small Finance Bank to RBI. And now let's look at the scenario analysis as how this can play for AU Small Finance Bank. So there are three factors which will definitely play out for the bank. First one is the priority sector lending. So when we talk about small finance banks, they're required to give around 75% of the total credits to priority sector. But as a universal bank, this ratio will come down almost to 40%. Now this gives new avenues for the credit for AU Small Finance Bank, and at the same time, this will also generate some kind of extra return when we talk about the other credit facilities. Next, let's talk about cost of funds, because as a small finance bank, we also know that when investors and as well as the depositors demand for high deposit costs, and that is the reason why the cost of fund for small finance bank is a little higher. But when we talk about universal banking, this cost of fund is also likely to go down. Now scenario analysis suggests that, and Investec also suggests that this could go as low as 20 basis point. I mean, the cost of funds could go down by 20 basis point, and there also we may see some ROE upliftment for AU Small Finance Bank. And lastly, when we talk about capital requirements, usually small finance bank are required to keep around 15% of the capital adequacy ratio, but when it is transformed into universal banking, it may come down almost to 11.5%. so there again we may see some headroom for growth for AU Small Finance Bank. Overall, we may see ROE upliftment somewhere in the tune of 400 basis point if RBI allows AU Small Finance Bank to convert into universal banking. Let's not forget that we have already seen that AU Small Finance Bank advances have grown almost by 33% over FY28 to FY24, FY18 to FY24. And when we talk about the Q1 FY25, there also we saw some strong growth. advances are already reaching around 1 lakh crore rupees. We already have that AU Small Finance Bank is reaching around 2,400 touch points. So we may see some increase there as well. And another point to keep here is that this will also set a benchmark for another universal small finance bank for the conversion to universal bank. So we already know that Ujjivan Small Finance Bank was also in talks to apply for universal banking in FY25. We have other banks as well. So this will be a benchmark as how these banks can also go forward for universal banking. So definitely a positive news, not only for AU Small Finance Bank, but also for other players as well, now that AU Small Finance Bank has applied for universal banking.
Right. Okay, Gaurav, we'll leave it at that. In fact, let's check in on some of the charts as well. Naresh, now that at least, we don't know how long this global weakness is going to last, but assuming there's no deeper damage in store for us, considering that we are already resilient as opposed to our global peers, do you continue to see underperformance from Nifty Bank?
So for now, yes, the underperformance continues. As of now, we are not seeing price action in any of the heavyweights in the Bank Nifty. We just see ICICI Bank taking lead. The rest of the names are actually totally sideways. So if we see some price action change happening in either of them, then maybe we change the view. For now, the underperformance continues.
So that's the word coming in on the banking index. But Siddharth, since you talked about how a lot of stocks from the broader markets are still looking ripe for a bit of an up move, what would be the top 2-3 names that come to mind?
Yeah, I think one stock that is our preferred pick is in the EMS space, which is Kaynes Technologies. The company has recently got the government approval or the cabinet approval to set up the semiconductor plant in Gujarat. Apart from that, it has recently also set up a new manufacturing facility in Hyderabad dedicated towards smart meters. So what we are seeing is that apart from the strong growth in the core electronic manufacturing, the company is gradually diversifying it into newer products which are not only high growth but are niche in demand, and that should lead to strong growth. So it has also formed some of the technological tie-ups with some of the global players, for example, Bright Grid Technologies or the Light Speed Photonics to strengthen its footprints in the semiconductor. And we believe that going forward, semiconductor would be a strong growth focus area for Kaynes. Even before that, we are expecting a strong growth in the core business for the next 2 years. Our anticipation is about 67% earnings growth, which should drive the stock price. We have a buy rating on Kaynes and a target price of 6,000.
The stock to watch out for, Kaynes Technology, from the entire EMS vertical. Recently, they did get some of the approvals as well on the PLI, so that's something that might just work out better for that stock. What else is happening in the market? Of course, CCL Products continues to do well. Piramal Pharma, Jubilant Ingrevia, the defense names. In fact, Prestige Estate is also doing quite well. You had a couple of other names as well from the entire real estate pack that had managed to do some QIPs as well. What's the view on real estate right now, Siddharth? Because there was the expectation that it has perhaps peaked out and some of these companies are now coming up with fresh QIPs, taking fresh money so that they can create the land pool, etc. for the next cycle, it seems.
Yeah. So I think real estate, the long-term thesis continues because if you look at the pre-sales has been pretty strong. Yes, we have seen the cycle doing well for last 3 years, and there is some fatigue in terms of growth on a Y-on-Y basis. But what we are seeing is that the double-digit growth remains intact for the entire real estate space. The new supply or the launches are now being controlled, and we are seeing fewer launches, which is leading to the prices or realization being continuously strong. And overall, we believe that the FY25 pre-sales would remain strong for this year, and we see continuous re-rating potential in companies on back of the strong business. Plus the balance sheets, which have improved a lot. So we are seeing a lot of cash flows improvement in some of these companies. What also we are liking is that from the, you can say the luxury segment, which was doing well, the mid segment will start doing well with the expected rate cut in the next few months. And that would also drive a lot of these mid residential players. Our preferred pick would be Godrej Properties, Prestige Estates, and Sobha Developers within the real estate pack.
Right, okay, that's the realty pack, and that's where Siddharth is seeing opportunity right now. Siddharth, anything else wherein you're bullish and recommending buying in this market?
Consumer space is something that we believe in this market could do well. Monsoon has been good. We are seeing commentaries from a lot of managements about rural sector growth improving after the elections, and also with monsoon doing very well. So our preferred pick within the FMCG space is Godrej Consumer. The company has adopted a growth-oriented strategy, which includes acquisition, cross-selling, entering new segments, and also redefining its target market, so the TAM for its existing products. That is helping it improve its growth. Overall volume growth, the company is targeting high single-digit volume growth in FY25 in India, and is looking at an EBITDA margins in the mid to high 20s. So that should be very positive. We expect the earnings growth for Godrej Properties to be the strongest among its peers. We are forecasting an 18% PAT CAGR and margins to expand by 100 basis points. So that's a buy with a target price of 1700.
Godrej Consumer, that's the name to watch out for on the consumption pack. But Naresh, what's the view on Biocon? That stock has managed to get charged up right now, and UPL as well. It of course is a positive news to back the move with respect to the value unlocking that is expected at one of their arms. But on the charts, what will be the recommendation for UPL and Biocon?
So Biocon looks interesting in terms of the price volume action which has happened in the last couple of hours. Also, the last high for the stock was around this 377 mark. The last time it was at 380 was back in 2021 into 2022. So looks like a major momentum shift, and the trend has been up for quite some time now. Looks like a breakout could surprise on the upside. UPL similarly is a bottoming out case wherein the stock has consolidated and corrected over the last 2 years. Sustaining above 600 would be a short-term breakout, would give an upside towards 660 levels.
We'll let you all go on that note. Siddharth, good to have you on the show. Shrikant, Naresh, good to speak with you guys as well. Let's begin winding up for the day. And what remarkable resilience. We're actually closing in at the session highs. Didn't quite make it back to the green, but almost there. Only 67 points lower. And I say only because of the way the global markets have been panning out. Remember, the US futures are still indicating a downtick for us. Nvidia is still down about 2% in the pre-markets. And we all know what happened to the Asian screen, or for that matter, how Europe as well has kick-started the day. Of course, the sore losers today have been metal, technology, some of the power as well as the banking names as well have been laggards. ONGC fell a good 3.25%, M&M, Hindalco, LTIM, Infosys, SBI, they've all been ranked underperformers. On the flip side, sectorally, FMCG, cement and pharma, they have been the ones which have been the big winners today. Of course, gains were quite elevated when it came to some of the OMCs. HPBP both held out smartly. Biocon lapped up about 4.5% in trade. Granules held out very smartly, a good 2.5% uptick there. And paints as a segment is where you saw most meaty gains. So everything from a Berger to an Asian Paints, all those stocks held out very, very smartly. On the losing side, there was Startup Power also, which fell about 3.25% or so. A BHEL, RBL Bank, they have been some of the big laggards in trade. But really the flip has happened thanks to Kotak, Bajaj Finserv, HDFC Bank and Reliance Industries. But that's that on this edition of Closing Trades. It's a goodbye from Anisha and me, and we'll see you again tomorrow morning.